Contrary to what a lot of YouTubers are out there saying about the housing market, it is not crashing. It's not going to drop by 40 to 50%. Even with home sentiment being at its lowest level in a decade, the housing market is actually remaining pretty strong. And in today's video, we're gonna talk about that in more detail. If you're here in California, you're gonna wanna pay attention to this because we're gonna talk about California as a whole, and then we're gonna talk about what's happening in my market here in Orange County. We're gonna talk about what I'm seeing with inventory, what we're seeing with regards to demand, and at the same time, expectations of what's going to happen over the next couple of months, on top of some stories about recent buyers, recent sellers in this market, how those offers went, to give you a better idea of how to navigate the real estate market as we head through the rest of 2022. So over the last couple of weeks, all we've heard about is increasing inventory. You know, the number of homes coming on the market, flooding the market, sellers absolutely panicking, trying to get out. And the reality is, yes, inventory is increasing, but it's only up 1% here in California year over year. So the amount of inventory coming to the market seems like a lot because we've been at such depressed levels for the last 2 years. So when all of these homes came through the market through the spring and into the early summer, it seemed like, the market was just getting hammered with property just because we've been so used to hearing how there are no homes out there. So yes, inventory is coming to the market, but not at a rate that's causing any sort of crash or big declines in prices. And with that said, we're still 54% below the 2017 to 2019 averages during that time. So 54% below a normal market. 2017 to 2019 was a normal market, right? No one was out there talking about the craziness that we've seen over the last couple of years. Things were still selling, homes were sitting a little bit longer. You saw price reductions. You saw, some homes selling for less than the asking price. That was a normal market. And so we have 54% less homes than that period of time. On top of that, even with the crazy growth that we've seen in inventory, it would take a year at this rate for inventory levels to fully normalize. Now, one thing we've been discussing over the last couple of months is interest rates, right? Leading to affordability issues. And that's one of the reasons that we've seen inventory levels increase so fast, just because of the affordability that was affected, by buyers with the rate increases going from 3.25% at the beginning of the year as high as 6.25% in June. But what we saw over the last couple of weeks is interest rates have actually retraced to the low 5% range for many well-qualified buyers out there. And with that, we've actually seen a pickup in buyer demand. In fact, on a live stream that I did on July 27th, a couple of weeks back, I actually mentioned how I thought, there was a pickup in buyer demand out there. And this was before rates actually went down. I could feel it out there in the market. And here's a quick clip from that live stream. I've actually, the last 2 weeks, week and a half or so, give it 2 weeks, I've seen activity in the market pick up with regards to showings, with regards to the number of people interested in property. Now, if you're not aware of the live streams that I do them every Wednesday, 5 p.m. Pacific Standard Time. It's where we answer mortgage and real estate related questions. So if you want to join us on the next one, be sure to tune in on Wednesdays at 5. But like I said, demand has definitely increased, and with rates going back down, it's gotten some buyers off the fence. But at the same time, we are seeing homes with price reductions increase. We're currently sitting at about 34% of the homes on the market at this time have had some sort of price decrease. Now, that's actually about 19% more than this time last year here in the state of California. Now, you can see even in a hot housing market, there were price reductions out there, right? People overpricing their homes. Well, now we've seen more of it. Why? Because they've heard stories of their friends. They've seen their neighbors' homes sell for astronomical prices. And for, better part of 2 years, sellers were able to get away with pricing their homes at crazy prices, and it's selling for that, and sometimes above that. I've talked about it here on different videos that I had several clients last year price their homes about $150,000, in some cases higher than I thought the home was worth. And those homes sold above that price because of the craziness in the market. And so there's a lot of sellers out there still trying to do that. When in all reality, as we know, the market has shifted and calmed down, and you're not able to get away with this craziness. But there's many sellers out there that still want to try. They want to see if their home is the special one, the one that everybody wants, and they want to see if they can get away with going way above the asking price. And that's why you're seeing a large majority of homes start to have these price decreases. It's because they're overpriced to start. Now, with all of that said, there's a lot of people out there saying that they're going to wait to buy homes until prices come down. And if that's your strategy, I hope that it works out for you. I don't think it's realistic because I think the housing market's going to remain stable just because I don't see a lot of inventory flooding to the market. In fact, I think we're probably close to the peak in inventory that we're going to see this year. You might see it go up a little bit further from here, but there's a really good chance that it starts to decline as we start to head into that fall winter market, right? For many states out there, schools are starting, kids are back in school. Here in California, my kids are still out for about another month. So I think within the next month, inventory is likely to peak this year, and you're going to see it decline throughout the rest of the year. So with that said, inventory levels are still below a normal market, which means that sellers are still in control out there. So the idea of waiting for home prices to pull back substantially, I don't think it's going to happen. I don't see any way in which it can happen. And on top of that, you got companies like BlackRock that just came out and said that they're putting together a $50 billion fund to start to buy properties as the market settles and pulls back a little bit. So not only are you going to be competing against other people trying to do what you're doing, you're competing against a big fund that has cash that's looking to come in and buy property for investment purposes. And guess what? For them, it's not an emotional decision. It really comes down to do the numbers work. And so, while you might be sitting there waiting for the market to pull back, understand so is your competition. And as I've mentioned before, I don't think buying a property is about catching it at the top or the bottom. It's about making the right decision for you. In fact, I filmed a video last week that I'll link to here where I talk about why I'm considering buying a property now, why it's important for me at this moment to buy a property. So if you're in that position and wondering who would buy in this market, do me a favor and check out that video. Now, in just a minute, we're going to talk about some recent buyers and sellers that I have here in California. We're going to give you an update on Orange County real estate as well. But what I want to do right here is throw a list of the top 10 most competitive cities in California on the screen so that you can see if you're in one of these markets, it's likely still going to be really competitive out there. Now, as you can see, these cities are all in Northern California. If you're around that Bay Area, you've seen this over the last couple of years. It's still a competitive market out there. And on top of that, here's a list of the 10 metros with the fastest growing price. And the reason I post this just to get an idea of what the market's doing out there in different areas if you're looking to buy in California. Now, if you are in California and you're a first-time home buyer just going through the home buying process, wondering where to start, do me a favor, check out a link in the description below where I recorded a 50+ video series to take you from a novice in the home buying process to an expert. Again, there's a link to Becoming HomeWise. It's a first-time homebuyer course. It'll definitely put you in the best position to be able to buy a house as the market starts to shift. Now, earlier in the video, I mentioned that I would talk about what's happening with my buyers out there, my sellers here in California. So over the last week and a half, I've put in 2 different offers for buyers that were not accepted. And I want to talk about those offers because I think it's important to note, as many people out there are talking about crashes and pullbacks and no one's buying, that we didn't win either of these offers with, writing a super competitive offer. So the first property was a $900,000 list price. We came in at $910,000. We put 20% down. We waived both the appraisal and the loan contingency, and we didn't even get a counter offer back. They accepted another offer. The agent said our offer was competitive, but they got another offer that they wanted to move forward with, so we didn't even get a counter. Now, understand this property had only been on the market a couple of days, right? So it had just come on the market, hadn't been sitting for any extended period of time. So it's a hot property, and that property was located in Long Beach, Lakewood area. So if you're in that market and you're in that 900-ish price point, it could still be really competitive out there for you. Now, the second offer I've talked about in another video, but it was a purchase price of $1.2 million. Now, this one was in Orange County, and we offered $1.2 million, again, putting 20% down, shortening our contingency periods, making a really strong offer, and we got a counter offer back. And on top of that, we offered 30 days of free rent. We got a counter offer back, countering us to 1.25. So $50,000 higher than the asking price. There was multiple offers, and they asked for 60-day free rent back. We accepted the 1.25, so we accepted a counter $50,000 higher than their asking price. We also gave them the 60-day free rent back. And guess what? We lost that offer as well to an all cash offer that accepted similar terms. So for anyone out there telling you that people are just giving away property, the reality is they're not. And both of these properties were a little bit different in their style and design. The $910,000 property and the $900,000 property needed work, right? It wasn't a perfect property. Whereas the property that was at 1.2 ended up selling for over 1.25 was newer construction, nicely redone on the interior. It was exactly what people wanted. So both of those properties, while they're both different in different areas, both had multiple offers and sold within a couple of days. Now, the last example I want to talk about here is a seller that I've had. They were on the market for 88 days. Now, this is at a price point between 1.4 and 1.5. Been on the market, like I said, 88 days, sitting, getting showings here and there, nothing crazy. And then we saw that little bit of a spike in demand that I mentioned earlier in the video. At that point, I ended up receiving 2 offers on the property, taking the price up $25,000 higher than my list price, with a buyer who was waiving the appraisal contingency and putting $1 million down. So a lot of cash out there. They're selling another property, buying this property. They're taking funds from that property, adding on to it, and buying my client's property. So my property had been sitting on the market for a couple of months and ended up selling above the asking price. Now, you might say, well, Jeb, you ended up reducing the price at some point. Yeah, but we were overpriced to start with. We should have never been at the price we were to start. We ended up getting more than I thought we would in this market because of that multiple offer situation. So things at the moment are still really competitive. That's why here in Orange County, we actually saw the days on market over the last couple of weeks go down. It was averaging about 72 days on market. We currently sit at about 67 days on market. So with that little boost in demand, days on the market have declined because it's a little bit more competitive out there. Homes are selling a little bit quicker. Now, we have seen inventory increase to 4,049 homes as of the time I'm filming this video. Now, that's about where we were 2 weeks ago. So we've seen property come on the market, but we've also seen homes go into escrow. So inventory's not really increasing. Whereas a couple of weeks ago, we would see the inventory increase by 100, 200 homes week over week. And that's why I think we've seen the peak in inventory this year, or pretty close to it, is because the number of homes coming to the market has slowed considerably. And to give you some context, last year we were sitting at about 2,500 homes on the market. So that's 38% less than today. Whereas the 3-year average between 2017 and 2019 was nearly 6,750-ish homes. So we're still well below that. Although we're more than we were last year, we're still well below that average between 2017 and 2019, which again was a normal market. Now, if you're here in Orange County and you read the Register, you might have seen an article recently that said home sales plummeted 37% in 45 of the cities here in Orange County. Again, it's a headline. It's a shocking headline if you read it. Yes, the number of homes going into escrow and closing are less than they were a year ago or even last month. And it's due to affordability, right? What we've discussed, home prices going up, interest rates also going up, making it more difficult for people to qualify. But don't look at that headline saying, home sales plummeting 37% and think that no one is buying property. People are still buying homes out there. The market remains strong. It's just a different market than it was last year. It's a changing market. It's a decelerating market, but it's not a market market where you're going to get a steal on a property. It's not a market where you're going to see a huge amount of foreclosures come to the market. It's a market where you have a little bit longer to make a decision on buying a property. It's a market where you're going to see some price reductions on property. It's a market where you're able to keep your appraisal and loan contingencies in place in many cases and have more negotiating power. And as we move through the fall, you're likely to get some more of that, negotiating power, if you will, unless we see rates continue to decline. If we see rates decline, the market could pick some steam back up and it could make it a little bit more difficult. But I think interest rates will likely stabilize somewhere in this range, which means that you're likely to continue to see a slowdown as we move through the end of the year, because that's typically what happens with seasonality, and more so this year because of those affected by affordability. Lastly, if you are here in Orange County, you want some more information about certain price points, how quickly homes are selling, all of that stuff, do me a favor, check out this graph here. This is from Reports on Housing. It's a newsletter that I subscribe to that has all the local data. Now, if you're still watching this and want some more information on California real estate, do me a favor and check out this video here.